Investing is one of those things that takes patience, skill, and of course a little bit of luck. That is, unless you had some spare bitcoins lying around in your wallet and decided to sell high back when the value of bitcoin shot up to 19,000 US dollars in December of 2017. But while some people were predicting that the value of it will continue to surge and reach over 1 million US dollars, and here we are today, when the value of Bitcoin and other cryptocurrencies has plummeted, kind of like Paris Hilton's singing career. Bitcoin in particular has lost almost 80% of its value since hitting its ultimate high. So what exactly is behind this crypto crash, and how did Bitcoin spike in value in the first place? Well, although there was not one definitive answer that made Bitcoin rise to blinding heights, a few educated guesses have been offered. One popular hypothesis is that crypto enthusiasts started to see Bitcoin as a collectible item that they did not want to sell and that they expected to rise in value, and that they were willing to spend more on it, kind of like Pokemon cards, as only a finite number of bitcoins will ever be produced or mined. But for folks who were not just interested in holding Bitcoin, there is also an expectation and a hope that cryptocurrency will move out of the realm of hobbyists and get big time backing from big time investors as well as companies that run financial exchange. And while this did happen to some extent, there was kind of a cruel irony for folks that went all in on Bitcoin. You see, another reason that it became so popular is that people wanted a store of value that wasn't subject to external regulation from government, especially in light of the worldwide recession that hit roughly a decade ago. But at the same time, bigger players on the global financial scene often want some kind of stamp of approval from some kind of government, so they know that they are not taking too much risk. However, Bitcoin struggled to get what it needed to become widely listed on exchanges mainstream. Investors weren't that interested in directly buying Bitcoin, so instead they wanted to buy Bitcoin shares that were listed on more traditional trading markets. But the Security and Exchange Commissions in United States refused to approve quite a few of these Bitcoin investments, and some of the exchanges that did offer cryptocurrency without SEC approval appeared to be vulnerable to market manipulation. Now, if that all sounded like a whole lot, here's what it means. People wanted to make a quick buck at the expense of the rest of the market space, artificially inflated the price of Bitcoin by buying these Bitcoin shares or futures, then bought a bunch of actual Bitcoin separately to pump up the value and make it appear that the demand was a lot higher than it actually was, something that they could get away with because of the lack of regulation. And this uncertainty towards Bitcoin was exacerbated by its ominous nature. See, the idea of crypto payment systems or payments weren't necessarily tied to an individual. This was a big part of the reason for crypto's original appeal. But the regulation it would need to gain for more acceptance would likely require to make the transaction easy to trace. Indeed, the US authorities proceeded a number of crypto exchanges and asked for records, which is exactly the kind of thing that would put off people that were excited about it in the first place. On top of that, Bitcoin becomes harder and harder to mine as more people enter the mining game, meaning that power consumption goes up. So prospective miners needed to sink more and more money into both their hardware and their electric bills. As time went on, and since so much of the demand for Bitcoin was driven by people interested in mining rather than interested in actually spending it on stuff, it wasn't surprising when flagging interest in mining caused Bitcoin to lose a good chunk of its value. Then you throw in some high profile hacks of major Bitcoin exchanges, and like other speculative investments and fads, Bitcoin ended up falling off in popularity. Of course, we are not saying that governments and markets can't figure a sustainable future for cryptocurrency. This is not over. It's just that some of the things that made it popular in the first place are also keeping it from getting mainstream. We're saying that investing lots of money in it is still a risky proposition. So if you really want to see your money grow, quickly, there's always nickel slots, the Powerball, and that big wheel on Price is Right. Speaking of right, I would be right to tell you to hit the like button and also don't forget to subscribe. And also leave a comment on this video saying anything. If you can't find anything to say, then just comment strawberry. It helps the video to grow a little.